if you're the king, you don't need to rush, right? You can sort of like take your time and do things the right way because you're not in a hurry. And I think Bitcoin still remains the king.
All right, we're here with the co-founder of one of the leading projects building on Bitcoin in the year 2024, Muneeb Ali, co-founder at Stacks and CEO of Trust Machines. Thanks so much for coming on, man.
Oh, thanks so much for having me.
Yeah, it's exciting because right now all the talk of the town is what's getting built on Bitcoin and at Stacks. I don't know. I don't want to mischaracterize what you guys are doing, but I will say this: it's gotten a lot of attention in terms of building on top of Bitcoin to enable smart contracts and the liking and the like of what people can now do normally in other ecosystems now in the Bitcoin ecosystem. So why don't we just start with the way that Muneeb explains Stacks and what people should know about it if they haven't before?
Yeah, I think this problem that we've been sort of like working on, which is how do we unlock Bitcoin liquidity? So Bitcoin is more than $1 trillion in pristine capital, and how can developers program it? How they can deploy it, and really use BTC as internet money? Obviously, as you can imagine, that's been the holy grail problem in our industry for a very long time, and it is a very technically hard problem to solve as well. So the Stacks project started around 5 years ago, late 2017, and we did our mainnet launch in early 2021. And I think even back then, a lot of people would look at Bitcoin and they would sort of be like, hey, Bitcoin is like a passive asset. It's more like a quote unquote pet rock. And most of the assets that you can program are platforms where developers can do interesting things. They're Ethereum or some of the other newer upcoming chains like Solana and so on. And I think there was some reality to what they were saying at the time. But I think what a lot of people missed is that technical challenges can be overcome, right? Bitcoin is something special. Bitcoin is by far the largest asset network. Bitcoin is by far the thing that everyone knows about. It has the biggest community, the biggest brand name. And it is also like very, very simple that Bitcoin is just trying to be money, right? It's not trying to be something else. It's not trying to be something very complicated. And then most of the stuff that people are building on Ethereum, Solana, other places, it can be built as L2s on top of Bitcoin. And I think once we were able to really unlock that, once we were able to actually sort of like, give people the roadmap, but also the tooling and the software for how exactly that's going to happen, I think that really, really helped. And a lot of other capital and developers started coming in as well. And now it's becoming a category. So it's not just Stacks that's saying, hey, we are Bitcoin L2, we can enable this. There are tons of other developers, other projects that are coming in, and this entire category of Bitcoin L2s is actually expanding pretty rapidly, which is great to see.
Yeah, and I mean, obviously, again, it makes a lot of sense in terms of if so much money in crypto's market cap is there on Bitcoin, why need to build all the other things? But the technology, I guess, wasn't there until we saw a lot of people building on top of Bitcoin. When it comes to that, though, I guess, you can look at a few different metrics as far as kind of what is important to watch or what you watch as you grow the ecosystem. I suppose you can look at daily active addresses for Stacks. We have a chart here that's maybe slightly outdated now, but I mean, the trend seems to be positive. I mean, what are those KPIs or metrics that you watch in terms of, okay, normally people would look at total value locked, but you kind of already have a massive amount of capital, as you said, in the Bitcoin ecosystem. So what are you looking at?
Yeah, so I think one interesting thing to look at is even compared to Ethereum, I think even the Ethereum L2 market is much more mature compared to Bitcoin. So even for Stacks, right? The Stacks is going through a major upgrade right now. It's called the Nakamoto release that brings like much faster block times, a better UX for users, but most importantly, a decentralized way of moving BTC capital from L1 to L2. So I think the version of Stacks that's live today, yes, is getting some usage, but that's not the main thing. I think the Nakamoto release is the main product that's sort of like not live today. And same is true for a lot of other L2 projects as well that are trying to build. So there is a lot of interest in building these things, but we're definitely in the infrastructure phase. Stacks is definitely ahead in terms of maturity and because how close we are to the Nakamoto upgrade. So the type of metrics we're looking at right now, I think they'll change a lot once sort of like the true L2s are live and people are able to use their BTC capital over here. So for Stacks, the thing that I would personally be interested in, as you've already mentioned, is the amount of BTC that has been moved from L1 to L2, or more specifically, the amount of BTC that is now becoming productive, because Bitcoin right now is a passive asset. People aren't like actively deploying it. They aren't like earning a yield on it and so on. So that metric would be very interesting. And even small numbers like 1% of BTC is a very large number, right?
Hmm.
So even relatively small numbers of Bitcoin that can be made productive would actually just change this industry, because that not only makes BTC more valuable as an asset, it changes the conversation with large institutions as well, who typically prefer productive assets to just passive assets that they can just hold but don't get a yield on it.
Yeah, I mean, when it comes to the Nakamoto upgrade, as I understand it, in two phases, the second one to be completed sometime in late May, and the idea there just kind of being, I guess, what's the improvement? Because I guess obviously it's not just kind of speed people are looking for, the ability to do these things, but also to, I guess, have the block settle quicker. So what kind of does this upgrade unlock, and what should people expect?
I think there are three big things with it. So the first is speed, which I classify as like Bitcoin UX. If you look at Ethereum or other networks, they've been able to give the end users like fairly good UX in terms of how much they have to wait before they get a confirmation for their transaction. If you look at Bitcoin, and same with the first version of Stacks that's live today, it's basically every 10 to 40 minutes you get a block, but it's also very unreliable. It's not only that it's slow, it's also very unreliable, so the user doesn't have a good experience of using the network. And I think that's actually extremely important for Bitcoin's adoption worldwide. Bitcoin needs to be fast, cheap, and sort of like very reliable. And right now, that's not the user experience that people have. So Stacks Nakamoto was sort of focused on this thing. Can we give people, call it like 5 seconds blocks initially, but they can always keep getting faster. But it's cheap, it's fast, but it's very reliable. People know that if I click something very quickly in a few seconds, this thing is going to go through, my payment is going to go through, and my BTC will actually move. And that's super important. The second big thing is security. So the way the Stacks Nakamoto works is once it goes live, any transaction that you do on the L2 is backed by 100% of the Bitcoin hash power. Meaning that for someone to revert that transaction, they would have to go and attack the Bitcoin L1 network, which is a massive, massive security upgrade. Like
Hmm.
imagine instead of starting like some small network that it has its own security budget, what we're saying is this L2 has the exact same security budget in terms of reorging transactions or reverting those as Bitcoin L1, and which is by far the most secure network that we have. So I think that gives users this really interesting sort of like an experience where their transactions are fast, they're cheap, but they're also not compromising on security. When a Bitcoin block arrives, you get the same level of security that you would get from Bitcoin L1 itself. So I think in that way, when we envision Bitcoin being used by hundreds of millions of users, I don't think that's going to happen on the L1. I think that's going to happen on the L2. Most people will interact with BTC on the L2, and over there
Hmm.
it needs to be fast, cheap, but it needs to maintain the Bitcoin level of security. So I think that was a very important thing with Nakamoto as well. And finally, I think it's about Bitcoin liquidity, like how easy it is for people to move their BTC from L1 to L2. What are the security assumptions? But it's also about again the UX of that. So a lot of the web wallets like Lether and Xverse and others that are there, they already support Bitcoin L1, and users can have a pretty seamless experience of moving their BTC from L1 to L2. And the
Hmm.
L2 BTC is more programmable. You can swap it against stable coins. You can deploy it in smart contracts. And I think that closing that loop for the end user was very important. And I think the third thing about Bitcoin liquidity is very important as well.
Yeah, I mean, all that's important. I guess from a consumer perspective, too, that's the other big thing that hasn't really been unlocked, though people have tried. I think Lightning Network comes to mind, and the idea of, I guess, former Bitcoin builders in that ecosystem, and things just never really took off, I think, the way that people wanted it to. I wonder what, in your opinion, kind of hindered those projects that have come before Stacks in what they tried to do, and how much, I think, how important it is, and maybe you're not going for it, for the actual crypto user versus like the standard person off the street, because we always talk about who the core demo is. What do you envision when it comes to that?
Yeah, I think for the first question, like this has been a difference between Stacks and Lightning from the beginning. I think both projects started like close to the end of 2017, and we were always in like two very different schools of camps, right? Like in terms of design. And I really respect the Lightning developers. I think they've done a great job trying to build out like their vision. But I think the fundamental difference is that Lightning is a state channel, meaning that there's no global state, right? It's not a blockchain. Whereas Stacks, the L2 looks more like a blockchain, right? It has global state. And I think we have enough evidence from the industry. If you look at, every other chain out there, like Solana, Ethereum, Avalanche, name any chain, everything has global state and it is a blockchain, right? It also comes with its token because you need the token to incentivize the people who are maintaining that. But on the Lightning side, I think they really wanted to avoid having a token. So they came up with a solution that is more peer-to-peer. Then these peers have to sort of like coordinate with each other for routing and liquidity and all the other things, which I personally view this as like, in order to avoid the token, you introduce a lot of complexity and unreliability into the network itself, right? So it's a
Mm-hmm.
trade-off. So Stacks made the other trade-off. It's like maybe some Bitcoin people don't like the fact that Stacks has its own token that is incentivizing the L2. So maybe we'll rub off some Bitcoin people the wrong way. But I think technically, I do believe that that's a simpler, much more reliable solution. And it's not just me. If you look at the rest of the industry, almost all other solutions followed that design. Like Solana is
Mm-hmm.
built that way, right? So I think that's sort of like the main difference. And I think people are slowly realizing that the other path is like harder and less reliable, and this thing can be actually much more reliable, where people just don't even think about it. If on Solana someone wants to do a USDC payment, like you can send a 10 million payment, you can send a 100 million payment. You never have to think about how is it routing, like is there enough liquidity or not. And I think that's the experience people are going to have with Stacks Nakamoto. Like you can
Yeah.
just spend however amount of money you want. It's a very very sort of like a simple reliable UX. So I think that's sort of like the comparison with previous solutions. And I think in terms of like what type of users are we attracting, so I do think Bitcoin DeFi is a big thing. Bitcoin DeFi, people want to do interesting things with that capital base, but that is very crypto native, like in terms of people trying to earn yields, or maybe
Mm-hmm.
institutions can participate through more like middleman services that try to simplify this experience for them. But I think just the base case of using BTC, like I feel like because Bitcoin has been slow and hard to scale, we almost forgot about the original vision where a lot of the payments on the internet would happen in BTC, where there will be a circular economy of BTC, where people would be able to very easily trade against Bitcoin. Like imagine even NFTs trading against BTC on ordinals. That's a really good thing for BTC, the asset, because it's
Yeah.
being used as base money and people are doing interesting things with it. So I think just enabling that base case where Bitcoin payments become super easy to integrate, they're very reliable, people can do those payments is actually a huge use case for a leading L2.
Excuse me. Yeah, I do think that that's the big, I guess, differentiator when you think about what elements you need to provide depending on what people are doing. And right now, aside from Bitcoin DeFi, I feel like all the talk of the town, people would agree that now seems to be the most exciting time to be in Bitcoin for, I don't know, a few years, with what's going on with runes and ordinals. And I guess, would you loop yourself and your projects into the same kind of, I guess, vein of quote unquote controversy when it comes to the purists, as you mentioned them, in terms of people in Bitcoin just saying, no, we're good with digital gold? I guess, what do you make of all the building that's going on in Bitcoin right now and maybe all the pushback that it's received?
Yeah, so I think it's an extremely healthy thing. We have a term for it. We call it like Bitcoin Season Two, and Season One was actually pre-Ethereum. Like a lot of the innovative ideas actually came from Bitcoin. Like NFTs started on Bitcoin with Counterparty, stablecoins started on Bitcoin with OmniLayer and Tether issuing on that. Colored coins started on Bitcoin, which is sort of like ICOs, and I think the list goes on and on. And then basically, I think there was this event in history around 2017 when Bitcoin was going through the block size war, and there was almost like an internal civil war in Bitcoin. And at the same time, Ethereum was attracting a lot of developers, and it became the place that was like very innovative and was saying, "Hey, all the developers just come here and sort of build there." And I think now what we are seeing is Bitcoin Season Two, where a lot of the developers and capital is coming back to Bitcoin. And I think someone had a very interesting quote that if you're the king, you don't need to rush, right? You can sort of like take your time and do things the right way. because you're not in a hurry. And I think Bitcoin still remains the king. And we are seeing the same thing, that people are coming up with better standards for NFTs on Bitcoin, which is ordinals, or they're coming up with better standards for issuing tokens, which would be runes. And same with L2s. Like, we watched the Ethereum L2s, we saw some of the good things they did, some of the mistakes they made. We can take all of the lessons learned and apply that to Bitcoin L2s as well. And I think that's a very sort of like interesting thing. But in terms of any discussions with people who don't like this, I would just say that the time between 2017 and let's call it 2022 is sort of like the 5 years of dark ages in Bitcoin, and they weren't actually very good for Bitcoin.
Yeah.
Even if you're a Bitcoin monetary maximalist, if all you care about is Bitcoin as money and Bitcoin should become more valuable, because these things are bringing more value to Bitcoin. If you think of this way, that casinos are going to exist outside of Bitcoin, and it's actually better for BTC, the asset, if within the casino, the asset that people are, the base money that people are using is actually BTC. Or
Yeah.
whenever someone wins in the casino, they sort of like cash out in BTC and keep their savings in Bitcoin. Same for like building a circular BTC economy. Like, if Ethereum takes that over or some other network takes that over, that's a missed opportunity for Bitcoin. And I think these things, especially like when talking to these people, I try to focus on the impact on the value of Bitcoin. That anything that these people are doing, they would have the opportunity to do it somewhere else anyway. But when they're
Yeah.
doing it around BTC, they're actually making BTC more valuable. They're making
I
Bitcoin's block space more valuable.
Yeah, I hear that, and I hear, I guess, also what you said around runes and ordinals being more better NFTs. I'm sure there's some people out there who would debate that in terms of how easy they are to use, maybe for the average layperson now, versus where they might be in 2 years. One thing that it's definitely true, you made the point of block space and demand and mining fees right now. That's the other chart we have in terms of Bitcoin mining revenue now, as we've seen ordinals and runes take off. And I guess I'm curious to get your take, Muneeb, in terms of if all of that maybe, again, goes to show that projects like Stacks or other projects in the space are needed just for kind of how to alleviate some of the demand for Bitcoin block space. Just because obviously all of this can't happen if you're thinking about people getting crowded out. And I would say, let me just play devil's advocate here. Let's just say, like, what happens if so much dissatisfaction is spawned by all of this that you start to have people say, I don't want to use Bitcoin for what it had been used for so long.
Yeah, so I think that's a fundamental debate that we've seen in Bitcoin. This was literally the heart of the argument between the Bitcoin Cash and Bitcoin crowd back in 2017, where one side was saying that we want to use Bitcoin for payments directly at the L1, and the other side was saying that you could never scale it at the L1 and maintain the level of decentralization that you want to maintain. And I think it's good that we ran that experiment and we actually saw that one side emerged as the winner, which is Bitcoin, which is the default Bitcoin, which is the small blockers who think that you can't scale to a billion users on the L1. That's actually just mathematically impossible. Like, a billion users can't even, own a UTXO on the main chain. So
Mm-hmm.
Bitcoin is going to be a settlement layer, right? It's the base network. It's your cold storage. So you don't interact with your cold storage as much as a hot wallet. And like think of it this way: the money you keep in your wallet, you access it so many times, much more frequently, and you use it actively. That is not Bitcoin L1. But you have
Mm-hmm.
savings somewhere that you are not supposed to touch that much, and you only very infrequently, sort of like use your savings and fund like your actual wallet. And I think that's the analogy here, where the L2s are the hot wallets. That's where most of the user activity is going to be. And the currency is still BTC. It's Bitcoin on different rails. So we separate out Bitcoin the asset from Bitcoin the rails. The L1 is where Bitcoin is defined and where it lives, and the L2 is sort of like where you move it to, and it's slightly less secure, obviously, but it's faster. And I think that's where most of the usage happens. And I think that's sort of like argument. On one side, I would just say that it's just data and science. Like, Bitcoin
Yeah.
L1 is never going to be the place where all of the transactions happen.
Yeah, which probably explains why it hasn't happened in as long as Bitcoin's been around, which I would agree with you on. I think, when you get into the debate too, though, around why all of this has happened and kind of the long game in Bitcoin, right? Because as we just saw with the halving, continually these rewards are going to get cut in half. And I think you're going to have a lot of miners sitting around saying, well, what do we do now? And so here are runes and here are ordinals. And I would just say that maybe it's sometimes the most loud proponents of runes and ordinals seem to be people who are in the mining game or people who have attachments to running mining companies. Maybe it's just a conspiracy theorist in me, but is it a bit like kind of too convenient that that's the case? What do you make of, I guess, where miners are at in this? And as you mentioned, Stacks has its own token as an L2 on Bitcoin. So, I mean, what do you make of, I guess, the long run game for how this ecosystem holds up if it doesn't have things maybe like runes and ordinals?
Yeah, so I think some of the criticism that I've seen for Bitcoin coming from the Ethereum camp was that Bitcoin is going to run out of the security budget, right? Because the transaction fees weren't very meaningful for many years, and the Coinbase rewards they keep going down every 4 years, right? That we just went through another halving. So in my mind, we had roughly like 8 to 10 years of runway where the Coinbase rewards would become so insignificant that the Bitcoin network security would become questionable if we don't get a lot of usage on the network. And I think the other side of the argument, where people, hey, this hasn't been a problem in the past, this would never be a problem. Either Bitcoin will become so insanely valuable, or magically some users will appear. And I'm not in that camp. I don't think this is how the world works. If we are not actively trying to get a lot of developers and users on the network, and they're just going somewhere else, that's a market reality, right? So what happened with ordinals and runes and stacks is that now there is market data that shows that these users want to come to Bitcoin. They want to pay the transaction fees. And I think there have already been blocks where the transaction fees were higher than the Coinbase rewards. And now I feel much better, right? Like now there is real data to show that this may not be a problem, because as Coinbase rewards keep going down, we are just getting more and more traffic for these other types of applications that are running on Bitcoin. And that is a much more sustainable Bitcoin. Now you're not dependent on the Coinbase rewards. So again, going back to value accrual to BTC, for value accrual to BTC, it's actually a good thing that Coinbase rewards are going down. And there is a secondary source of income for the miners where the network security still remains very high and people are just paying gas fees or transaction fees to sustain the network.
Yeah. No, I want to believe you. I want to believe that it all makes sense. I mean, I think some people might make the case that even that on Ethereum wasn't real, in that a lot of it may have just been wash trading on NFTs. And now what's happening with ordinals and runes? I guess we'll see. I mean, it's still early, right? It's very early on in the game, and so I guess we'll see how much that activity maintains. I don't know if you're seeing kind of similar things in terms of how much boom and bust often happens when you do have kind of a port over of activity, and how much you're expecting it to continue at the pace it is. I mean, when you see it, obviously it's very different than DeFi and the idea of DeFi on Bitcoin. When you look at that stuff, how real does it seem to you?
I think I have more visibility on the Stacks L2 side, and I think on the Stacks L2 side, we've basically seen that the network traffic has been consistently growing, right?
Hmm.
So sometimes we see a spike here and there, which when some new app launches or something like that, but over time it has just been consistently growing. If anything, the biggest limiting factor has been the total network capacity that Stacks had. Like I mentioned, that the current version, it's sort of like optimized for decentralization, where you can run nodes on Raspberry Pis, and the network capacity is actually pretty small. And we just keep hitting that wall right now, and people are sort of like yelling at us to launch Nakamoto faster, right? And it's coming. As we said, the part one is already sort of like live. It went smoothly this week, and now there's a little bit more testing period for some weeks. After that, the activation step happens, and that's in some ways the bigger step, right? Like when everything actually activates on chain and the new rules go live.
One of the other questions, obviously, again, Coinage being a community-owned outlet, we have members who like to ask questions through me as well. And one of them is just kind of comparing some of these things. Obviously, you mentioned a little bit of how Stacks works and the idea of proof of work, proof of stake, and proof of transfer. That's one of the questions from Grayscale Zach Pandal, actually, is how does proof of transfer compare with proof of work and proof of stake?
I think the way to think about proof of transfer is that it's an extension of proof of work, right? So if you have the best proof of work network, which is Bitcoin, and I think there's historical data to show that typically there's consolidation on the proof of work level. Like it's less secure to have 10 different proof of work networks versus having one really large one. So I think Bitcoin has sort of like won that war. Ethereum stopped being a proof of work network. Other smaller ones are sort of like struggling and they can have deep reorgs. And Bitcoin, I think, is the only sort of like main uh, proof of work network that is highly secure. So the thing that we wanted to do was you already have this like massive network with so much hash power. How can we reuse this to secure layer twos that are built on top of Bitcoin? And I think the latest design in Nakamoto actually cracks it really well, where like previous attempts have been at this, like things like merge mining, but you always require permission from miners. Miners have to do special things, and you always find it hard to get to 100% of Bitcoin hash power. I think previous attempts have been at 30, 40% on average, and it's not that secure because a single miner can have a lot of that hash power. So with proof of transfer and with the Nakamoto consensus that's going live, you don't need any miner permission, right? So automatically the L2 is getting 100% of Bitcoin hash power finality.
Mm-hmm.
And I think that's amazing because what it tells developers is that instead of launching your own small network that might gain traction and become a little bit bigger, like Avalanche or Solana, which the probability of that is pretty low, right? Like hundreds of these things launch. You can start your thing as an L2 on Bitcoin, and on day one you'll be backed by 100% of Bitcoin hash power. So I think that was a major breakthrough that Stacks did with
Yeah.
the new Nakamoto release, and that has a very interesting sort of like dynamic with BTC as well. That if you look at BTC as stored energy, we are sort of like reusing Bitcoin to secure layer twos, and I think that again makes BTC more valuable.
As a follow up to that question too, because I think it's a really good way of explaining this, and I think Sean Farrell from Fundstrat, who's one of our favorite guests, has been a big proponent of what you guys are building at Stacks for a while, and has had it as part of his core strategy for a bit. And I think when you look at how much runway there is in the way that you've explained it, I think his parallel is looking at layer twos, their market cap to the market cap of what's going on in the underlying chain. So you can look at layer twos versus what's going on Ethereum, and what you guys are doing at Stacks and where your market cap is to how big the size of the pie is for Bitcoin. And I think he was saying like it's got a 30xer relative to what's happened on Ethereum. I mean, how do you look at that? Is that fair to you in terms of how you think about how long the runway is for what Stacks has ahead of it?
Yeah, so I think I'm an engineer at heart. I'm not a trader or a fund person, but I have friends, I have other people that I talk to, and I've seen these models, right? So there are basically two categories. One model is that people look at ETH L2 market cap compared to the total capital in Ethereum. So I think the total capital might be 300, 400 billion, depending on the day, and ETH L2 market cap is like 80, 90 billion. Compare that to Bitcoin, the total capital is north of a trillion, and the total market cap is around 5 billion, and Stacks might be 90% of it, right? So people look at that and go like, it's 5 and versus 90 on Ethereum, and Ethereum is a smaller network.
Yeah.
Bitcoin is four times larger than that. So that's one model people look at. But the second one, which personally is more interesting to me, is that people look at that if we are going towards a world where most normal users are actually going to use BTC on an L2 and not an L1, right? Like they will get onboarded to an L2 and they wouldn't even know. They would think this is Bitcoin, right? Because it's faster, cheaper, and most of the traffic is actually on the L2. So what is that worth relative to how large Bitcoin itself becomes? What is the worth of a leading L2 that absorbs most of the traffic, most of the users, and most of the activity actually happens on the L2? The L1 is more like settlement, right? Like base level
Mm-hmm.
stuff that only happens on the L1, or cold storage. Whenever you want to make a withdrawal from your cold storage wallet and bring it to the L2, those are the transactions that end up on the L1.
Yeah, it's interesting. I mean, again, I guess, everyone who's in crypto part-time, even though you're not trading every day, you do look at the numbers and you do wonder, where is this space all going? So it's another interesting way of looking at it. Munib, the last question I had for you is kind of one from one of our other members too, in looking at what Stacks VM offers that's superior to an EVM or SVM. We talked about Solana a little bit, used on upcoming BTC layer twos. So I guess what would be your answer to that?
Yeah, so I think with Sachs, we've definitely taken some first principles decisions, right? Like, for example, I described proof of transfer, which goes for reusing Bitcoin hash power. And once we explain it to people, people nod their heads. They're like, yes, why start a separate network? If you can reuse 100% of Bitcoin hash power, you should just do that. Same thing with our technology stack when it comes to programming. Like, our view is that the number one most important thing, like if you had one job, like it is basically that the smart contract needs to be secure. like like imagine people put money in these computer programs, and if that money
Hmm.
is stolen, there's a bug. Like, that is the one job that you have, and you should try to be as good at it as possible. So the clarity language is really focused on safety. So it has some really nice features where it's not decidable. People can still write, most things, most programs with it, but then they can analyze those programs. They know even before running those programs what exactly can happen or what can't happen, right? So it basically, again, people can always write buggy code, but it's a much more precise tool that sort of like helps developers from accidentally hurting themselves, right? So that's clarity. With that said, on the roadmap, Saks is actually upgrading to WASM as well. So WASM is an industry standard outside of crypto as well, with Google and other places. And I think Clarity would be able to sort of like compile to WASM, which makes it faster. But it also opens the door to things like Rust runtimes as well, potentially down the road. And which is interesting because some of the other ecosystems like Near, they also support WASM with Rust. Rust
Hmm.
is used in Solana as well. So I think this movement of EVM was obviously first, but a lot of people agree that it's not like the most secure, best thing to do. So I think many years have passed since then. So if people are now moving on to better languages or better standards like WASM, like that's actually a healthy thing, and I think Stacks would be able to be a part of it. But obviously, we'll always have our unique, safe language Clarity. Which the way I think about this is that people might get started with something that they're familiar with, like Rust, and then I
Yeah.
think once their program starts getting some traction, they might launch a V2 in the safer language. It's almost like an upgrade that, hey, I want to make sure I'm paying attention to security. I want to do my V2 in Clarity so it's more safe.
All these answers have been very spot on and very helpful, I think, for all our viewers and everyone who's watching this, hopefully to understand and wrap their head around Stacks. I appreciate you taking the time, Muneeb, to walk us through all of it. And I guess I lied. I have one more question. It's not so much a question as much as it is just kind of setting it up in the air for you to spike. But we always wrap up our interviews with kind of asking the smart people we have on to give us a big, bold prediction for where they think the space is going over the next year. Obviously, I would venture a guess that your big bold prediction might have something to do with Bitcoin DeFi and the DeFi moment that's happening in Bitcoin, but it's open to anything you want to throw out there. What's Muneeb Ali's big bold prediction for what we see in the next year?
Yeah, I think you're right. I've mostly been thinking about Bitcoin L2s and Bitcoin. So I think if you would have asked my 4 year prediction, I would have said that before the next halving, maybe we'll see the gas fees taking over as the larger sort of like block reward. I think that
Hmm.
that would be actually very very interesting to see. But I think over the next year, the bigger prediction I could have is the Bitcoin TVL across all the L2s. I think it might flip Bitcoin floating around on Ethereum.
What's that number at right now? Oh,
I
actually, I
think
haven't
maybe
even tracked it.
4 or 5 billion or something like that. Mostly WBTC.
Wrapped Bitcoin. Yeah. Yeah, I think that's been one of the more interesting projects. We've had Chad Barraford from Thorchain and Rune on before to kind of talk about originally, I think, a lot of the ways that people who had native Bitcoin were trying to find yield on it and what they had out there. And now, as we're listening to, a lot more options out there for Bitcoiners to maybe tap into some of this. But I appreciate you taking the time. Muneeb Ali, thank you very much for coming on, sharing a little bit more about Stacks. You got to come back, though, man. We got to have you back on as you develop this, and we'll be watching for the second chapter of the Nakamoto Upgrade.
Absolutely. Thanks so much for having me.
Awesome. Thank you, Muneeb. That'll do it for him, for us, for everyone here at Coinage. Thank you again for joining us. And as always, you can check out more of our info at coinage.media and also stake with us on more than 40 chains. That'll do it. I'm Zach Guzman, signing off.